What is up, everybody? So what I want to do today is I want to highlight a trade from last week. Basically, what this is just a very simple trade, and it's basically it's everything that I always talk about here. You don't need some crazy, ridiculous strategy with 85 indicators on your charts. I don't have any indicators on my chart. All right. Now, don't get me wrong, indicators have their place, but in reality, what I always talk about here is that risk management and your psychology is really the most important part. If you can master risk management and if you can master your mentality and your mindset, that is really what's going to set you apart as a trader. You don't need some crazy strategy. And a lot of the times, people fail in trading, especially new traders, not because they can't learn how to do technical analysis, or they can't learn fundamental analysis, or they can't learn to chart. What it is and a lot of times it's because their psychology and their risk management is out of whack. If you can master those things, you can really truly, like I say, stand out as a trader. And that's what I talk about here to my students, to my teammates, in my courses. Everything is capital preservation first, mentality first, and then profits. Too many people go after profits first and then worry about risk management, and that is going to really destroy your trading in the long run. So basically what we have here is we have a range that we've really been in this range since about May of last year. So we've been about a year in this range, a very long range and a very strong one. All right, I'm more of a breakout trader. I like taking breakouts, and this will probably make a pretty good breakout once it does break out. But I will take range trades or range plays when it's a strong range like this. Not only that, we got this double top here. So this is actually the second trade that we've took. The first trade we took at the bottom of the range, moving to the way up. And then this second trade we took here at the top of the range, moving down. Now, what I want to highlight is a couple of things. The first one is proper risk management and proper risk to reward. Like for me, I like to trade with a 1-to-3 or a 1-to-4 risk to reward ratio. It just allows me to really, it just puts the odds in your favor. When you're trading with 1-to-1 or 1-to-2, yeah, you can be more accurate, but a lot of times you want to really go after those large winners and be comfortable taking those small losses. That's really what you want to be able to do. So, but if we can pull out our little handy dandy short position, so we got that, and we can take our entry here right around 925, a little bit less. But basically, look, if you put your stops where they belong, remember, risk management first. And what's beautiful about these range plays, especially when it's a strong range, you can put your stops so absolutely tight to your entries that allows for quite a large risk to reward ratio. If we're looking to go to trade this all the way to the bottom of the range, now of course you're not going to trade it right there. You're going to trade it a little bit higher. You're not going to trade at the very exact bottom. But look at that. That's a 16-to-1 reward to risk, or 1-to-16 risk to reward. That means you could literally be wrong 16 times. All you need to do is be right once, and you would make money. And in reality, your stops can really be a little bit tighter. But if we have our stops right around here, we're looking at 10, 12, 16 times your reward amount. And that allows you to really, truly, that just puts and stacks the odds in your favor. Because if you look for these setups, if you look for setups with this type of risk to reward, you're going to do a lot better. All right, you can take a bunch of these small losses all day long. All right, that's really super important. You can take a bunch of these small losses all day long. And in reality, that's where you want to put yourself. You want to put yourself you just want to put yourself in a place where you have a large statistical edge over the markets. And that's really what this allows. So very simple trade. Really, a couple things that I want to highlight is, one, don't overcomplicate your strategy. Focus on risk to reward and focus on mentality, not so much your trading strategy with a ton of indicators. Risk management first, psychology first, then worry about your strategy. If this does move all the way down to the range, that is a crazy play. Now, I took about a 1-to-3 risk reward on this. My stops were right up here. I didn't want to stay in for earnings, but in this case, we had pretty shitty earnings, which of course helped out. But I got out before earnings. But basically, I took about a 1-to-3 risk reward. I'm actually starting to, on these range trades, even in my own trading, on these range trades, I'm starting to look for more of like a 1-to-6 or 1-to-5 risk reward, just because these ranges are honestly when they're strong like this, they work pretty damn nicely, especially double tops as well. We not only do we have a range, but really we have a double top here, and then it's retesting that resistance. So if I would have done a 1 to 5 risk reward, I still would have been taken out profitably. We could have gone all the way down here 1 to 7, and really this looks like it might be putting in a reversal. So I definitely do expect this to continue down to the bottom of the range. But another thing that I want to highlight is once you're out of the trade, whether it's for a 1 to 3, 1 to 4, 1 to 5, even a 1 to 1, once the trade is over, you need to analyze the trade. You need to be able to say, okay, could have I improved? But what you can't do, and this is where there's a fine line, you need to be able to keep that trading journal. You need to be able to recognize things and say, okay, well, these ranges are working pretty good. Maybe next time I'm going to start looking for a larger risk reward. But what you need to not do, and this is also where a lot of new traders get caught up, and when I started out in trading years ago, I really did this myself. So back 7 years ago when I started trading, a big thing and a big problem for me was I would get out of a trade, right? I luckily for me, I learned proper risk management relatively soon in my career. But the problem was I would set profit targets, I would set stop losses, and then I would see the move continue, and that would drive me nuts. I was saying, oh, I left so much money on the table, right? And that would just drive me nuts. What you have to be able to understand, what you have to be able to do is in trading, once you're out of the trade, you're out of the trade. Doesn't fucking matter. I don't give a shit if this goes up, if it goes down. Once you're out of the trade, you're out of the trade. That was a profitable trade or it was a loser, period. There are only two outcomes. You either win or you lose on these trades, right? If it's a winner, it's money in the bank. It's done. It's a done deal. You can't overanalyze and say, well, oh man, I could have waited and it would have got all the way to the bottom. Because see, what's going to end up happening is it's not about trying to squeeze out every little last bit of profit. It's basically, it's about getting the meat of the move, okay? Getting the meat of the move and then optimizing your strategy. Once you have enough data, once you've traded enough ranges, or once you've watched enough ranges, you can start to analyze that data and you can start to find the optimal or the prime location to get out. Is it a 1 to 2? Is it a 1 to 3? Is it a 1 to 4? Is it a 1 to 5? Is it a 1 to 10? Where's the optimal location that is going to balance maximum number of winners with maximum return amount? Remember that, because once again, if you can be 90% accurate and you're just taking 1-to-1s all day, that's awesome. All right. Now, if you can be 70 or 60% accurate and you're taking 1-to-10s all day, that's even better. So even though your accuracy comes down, because your risk to reward ratio goes up so high, and these are just examples, but because your risk to reward goes up so high, you can be less accurate and you can still make more money. If you're accurate 90% of the time and you're taking 1-to-1s, but then if you start taking 1-to-9s and you're only accurate 40% of the time, you're still probably going to be more profitable than taking 1-to-1s and being accurate 90% of the time. And we can actually do the math here. So if we're taking 1-to-1s and we're accurate 90% of the time, out of 10 trades, we're going to win how many? We're going to win 9 and we're going to lose 1. So basically we're going to make a profit of, if we're just trading on, let's just say 1 share, and we're just going to keep things simple. So you take trend trades, you lose $1, you make $9. Basically you make $8, right? Now on the flip side, if you're accurate 40% of the time, but if you're getting, let's say 10-to-1 winners, that's 4 times 10, okay, minus, and let's say your stop loss is about the same, it's still about 1, that's minus how many? That's minus 6. That's going to give you 34. So basically, your accuracy could suffer a literal ton. And that's really why I get that, a lot of people want that high accuracy strategy, but a lot of the really good strategies in trading are actually low accuracy strategies, 30%, 40%, and they're shooting for these massive winners. So understand that. And that's something that I learned a long time ago in my trading as well, is that I don't mind a low accuracy strategy if I can pull out 3-to-1, 4-to-1, or 5-to-1 risk to reward ratio winners, because it just puts you in a lot better place. Now, that once again moves back into psychology. And I know I'm going on a tangent here, but think about it. The reason why people like high accuracy strategies is because they don't like losing. But if you can understand that losing is part of trading and you can shoot for the big winners, all right, and you can, every time you get stopped out, it doesn't affect you. What happens is most people, it affects them, and then they don't take the next trade. But if you can master that, if you can conquer that, what you can start to do is you can start to shoot for those larger winners. And every time you take a loss, if you conquer your mentality, it doesn't bother you. And that's really where you need to be. You need to basically be like a fucking robot so you can take loss after loss, shoot for big winners, because a lot of the times those trades are going to be the better trades. All right, those trades are going to be the better trades, and it's going to put more money in the bank. Like we just said, if you can literally drop your accuracy all the way down to 40%, right? If you had a 90% accurate strategy, that means you're right 9 out of 10 times, okay? And you're trading with the same position size in both strategies, right? You're accurate 9 out of 10 times. You're going to make $8. We're just keeping it simple, and we're doing 1 as the stop loss, all right? You're going to make 9 wins minus 1 loss is $8. But if you can push that all the way out to 1 to 10 risk to reward, and your accuracy drops all the way down to 40%, now you on total you make $34. That's basically 3.5 times more. All right. Now, of course, we're just keeping it simple. In reality, that could be 3,500. That could be 35, that could be 10,000. Whatever it may be. We're just using 1 as the base amount just to keep it simple. But I hope that really clarifies in your head. And I highly recommend that you guys pull out a calculator and you do the math, and you can start to see that when your accuracy drops, okay, it's okay if your win amount increases by a good amount. You can actually make way more money. So another little tip for trading, but hopefully this was helpful. Honestly, if you actually use this information, this is some seriously good quality information. If you can internalize that and you can start to understand that it's okay to be wrong, this is very good information, and it will help you in your trading. So hopefully this was informative. My name is Derek. This is Finance in Chocolate. I know I talk way too fucking much, but I will see you guys in the next lesson. Until then, trade smart.